A very warm welcome. You're watching WION World is One. We begin this newscast with a press conference being addressed by the RBI Governor Shaktikanta Das. Let's listen.
Continued high-quality support to the MPC's deliberations with their hard work, research and logistics. Let me begin by giving a brief overview of the salient aspects of the MPC's deliberations. In its view, the global economy has lost further momentum since August 2019 meeting of the MPC, with trade and geopolitical tensions purveying heightened uncertainty. Among advanced economies, the slowdown in the second quarter of calendar 2019 appears to have extended into the third quarter as well. For emerging market economies, the worsening global economic and trade environment is weighing upon their macroeconomic performance. Crude oil prices were pulled down by softer demand and adequate supplies until mid-September disruptions in refineries in Saudi Arabia, but normalization has occurred faster than expected. Global financial markets have remained unsettled, with bouts of volatility in response to pessimism over global growth prospects. Against this backdrop, central banks across the world are becoming increasingly accommodative in their monetary policy stances, aided by benign inflation conditions. With regard to domestic economy, the slump in real GDP growth to 5% in the first quarter of 1920 has been followed by generally weaker high-frequency indicators for the second quarter. Industrial production was lower in July 2019 on a year-on-year basis, pulled down mainly by manufacturing. The production of capital goods and consumer durables contracted. The output of 8 core industries contracted in August, with production of coal, electricity, crude oil and cement decelerating or going into contraction. The manufacturing PMI for September 2019 was flat, though still in expansion zone. High-frequency indicators suggest that services sector activity weakened in July-August. Indicators of rural and urban demand continued to slow down in July and August. The Reserve Bank's Consumer Confidence Survey also shows weak consumer sentiment, especially relating to non-essential items. On the positive side, there has been a rapid catch-up in the southwest monsoon rainfall after an initial delay in its onset. By September 30th, 2019, the cumulative all India rainfall surpassed the long period average by 10%, while the first advance estimates of major kharif crops for 2019-20 are only 0.8% lower than last year's fourth advance estimates. The prospects for Rabi 2019 season have brightened, with live storage of water in major reservoirs as on September 26, 2019 being 115% of the live storage of the corresponding period of the previous year and 121% of average storage level over the last 10 years. Abundant rains in August and September has also led to improved soil moisture conditions in most parts of the country. Overall, Indian agriculture is well positioned to lead the recovery, which augurs well for rural employment and income and the revival of domestic demand. In the industrial sector, consumer non-durables, intermediate goods have posted sustained expansion during 2019-20 so far and have emerged as potential growth drivers. Moreover, manufacture and construction sector activity look somewhat better in August as per the IIP data. Among services sector indicators, domestic air passenger traffic also accelerated in August. Turning to external sector, with merchandise imports contracting faster than exports, the trade deficit narrowed during July-August 2019. Higher net services receipts and private transfer receipts helped contain the current account deficit to 2% of GDP in Q1 1920 from 2.3% a year ago. On the financing side, net foreign direct investment rose to $17.7 billion in April to July 2019 from $11.4 billion a year ago. Net foreign portfolio investment, excluding the voluntary retention route, was of the order of $3.3 billion during April-September 2019, as against net outflow of $11.5 billion in the same period last year. Net disbursals of external commercial borrowings rose to $8.2 billion during April-August 2019, as against net repayments of $0.2 billion during the same period a year ago. India's foreign exchange reserves were at $434.6 billion on October 1st, 2019, an increase of $21.7 billion over end March 2019. On the inflation front too, there have been positive developments. Consumer price headline inflation has moved in a narrow range of 3.1 to 3.2% between June and August. While food inflation picked up, fuel prices moved into deflation. And inflation, excluding food and fuel, softened in a broad-based manner in August and offset the firming up of food prices. Inflation expectations of households rose by 20 basis points for the 1 year ahead horizon, but this possibly reflected households' adaptive expectations in response to the rise in food prices in recent months. Manufacturing firms see weaker pricing power in Q3, which renders the outlook for selling prices benign. Overall, liquidity in the system remained in surplus in August and September. Reflecting easy liquidity conditions, the weighted average call rate WACR traded below the policy repo rate in August and September. However, monetary transmission remains work in progress. As against the cumulative policy repo rate reduction of 110 basis points during February to August, the weighted average lending rate WLR on fresh rupee loans of commercial banks declined by 29 basis points. Taking into account these developments and the impact of recent monetary policy rate cuts, the MPC has revised CPI inflation projections slightly upwards to 3.4% in Q2 1920, but retained its projections for H2 1920 at 3.5 to 3.7%. For Q1 2021, inflation is projected at 3.6%.
There you have it. The RBI Governor Shaktikanta Das addressing a press conference, giving us quite an insight into the latest review. Let's not forget that the RBI has cut lending rate today by 25 basis points to 5.15%. The earlier rate was 5.40%. Now, home loans are likely to get cheaper and markets may see more lucidity in banks. This is clearly a big support to Indian government. Not to forget that this move is clearly going to be in sync with the government's recent measures, including a reduction in corporate tax. Today's measures are certainly going to increase the consumer's spending power, certainly pumping more money into a slowing down economy. Now, the RBI has already done enough to address the falling GDP numbers as well. Shaktikanta Das also informed us about how the monsoon has been looking positive in the months of September and August, which might also boost growth as far as the rural sector is concerned. That depends on agriculture. There's been easy liquidity conditions also. According to Shaktikanta Das, there has been a sufficient rise in foreign trade. FDI also has increased. We will bring you up to speed as and when more developments take place.
Payment and settlement systems.